The UK faces a national housing crisis, and it's one of the biggest challenges facing the country today. Ever since the 2008 financial crisis, the UK has been subjected to both surging property prices and a shortage of homes, making it harder and harder to get on the property ladder, resulting in renting being the only option for many, and that too has become almost unaffordable. The result? The UK has more than 15 million people classed as living in poverty, all of which are struggling to pay housing costs that eat up large proportions of their income. Meanwhile, others face eviction and even homelessness if they are unable to keep up with the rent. And unfortunately, all of this doesn't even take into account the recent cost of living crisis, which is estimated to push a further 2.75 million people into poverty. Hi guys, welcome back to another video. Today we are going to be digging into the UK housing crisis, what it means for rent, what it means for property prices, what it means for investors, what the government plans to do about it, and finally what all of this means for the UK property market as a whole. So whether you're looking to buy your first property, your 10th property, or you're stuck renting, this video will cover it all. Now there's a lot to cover, so let's get into it. Starting with an overview of the crisis. Now, if we boil down what is meant by the term housing crisis, fundamentally it's a severe shortage of homes that are both available and affordable. This lack of supply can then lead to problems such as homelessness, people being trapped in temporary accommodation, or people stuck paying more than they can actually afford for housing, which has the knock-on effect of pushing people into poverty. Now, the UK housing crisis can actually be traced back to about 30 years ago, with the introduction of what is called the right to buy. This was part of the 1980 Housing Act and basically gave 5 million council tenants in England and Wales the right to buy their house from their local authority. This essentially led to the UK's social housing stock to completely disappear into private hands. And every government since has been unable to build enough homes to replace the stock that was lost. To be a bit more specific, the government has a target of 300,000 homes to be built every year by the mid-2020s. And as you can see from this graph, there hasn't actually been a single year where this target has been hit, going all the way back to 2001. Another contributing factor to the housing shortage is there are a certain amount of what is called land banking. And land banking is essentially where property investors acquire and hold on to land that could be used for housing, and they hold on to this land until such a time that it has reached its peak value. But before we carry on with the rest of this video, don't forget to subscribe to the channel, like and share, and of course subscribe to my newsletter Business Bites. The link for that is in the description. Unfortunately, this scarcity of available property has contributed to the increasing prices, and the number of people able to buy their home has dropped. Now, what does all of this mean for rents? Well, investors and tenants will find it no surprise. According to the latest data from the ONS, private rents have increased by 2% in the last 12 months leading up to January 2023, marking the largest annual growth rate we have seen since February 2017. However, not all areas of the UK have been impacted equally. In Scotland, rents increased 2.6%. In England, they increased by 2%, and in Wales, they saw an increase of 1.4%. Rental prices outside of London were broadly up 3% in the last year, with the biggest increase being seen in the East Midlands, where rents rose by a pretty staggering 3.6%. Meanwhile, in London, rents rose by just 0.1%. The small increase reflects a decrease in demand for London rents, according to experts, with the impact of remote working still impacting demand in the city. Property portal Zoopla also reported that the average annual UK rental growth had hit a 13-year high, with rents increasing to £939 by the end of 2021. On average, this is £62 higher than before the pandemic. This means that rents are up nearly 12% in the last 5 years and now account for 37% of gross income for single earners. And unfortunately, it doesn't appear as though things are about to get any better, with finance firm Finance reporting that rents could skyrocket by as much as 12.9% in 2023. Moving on to what this means for property prices. Now, of course, it's almost impossible to say exactly what is going to happen to property prices. That being said, with no signs of an end to the cost of living crisis and interest rates forecast to rise further, house prices are starting to fall. But this is not necessarily good news for people who are looking to get on the housing ladder. Rising interest rates mean significant increases in mortgages, which in turn means a reduction in buyer affordability. And this combination is starting to deter people from buying property, not so much by choice, but because they simply can't afford it. The Bank of England reported that mortgage approvals for house purchases fell for the 4th straight month in December, down to 35,600 from 46,200 in November, and reaching the lowest point since the first COVID lockdown in May 2020. The Bank of England has also been busy stress testing banks to see if they can withstand an economic crisis that could see interest rates hit 6% and inflation 17%. As part of this annual stress test, the Bank of England is testing the capabilities of banks to deal with a 31% fall in house prices, which they have classed as a worst case scenario. To give that fall some context, in 2008, during the credit crunch, the financial crisis, house prices fell on average about 20%. We also have Lloyds Bank predicting that house prices will fall by almost 8% in 2023, and in their worst case scenario, they could see house prices fall by as much as 18%. So, will house prices fall despite the significant shortage in available homes? In my opinion, despite the shortage of properties, if people can't afford to buy, then house prices have to come down. How much buy is anyone's guess, but the property market is a supply and demand game. Just because there isn't enough supply doesn't mean people will continue to buy. Not when there's a cost of living crisis to contend with and people's affordability is already being stretched to breaking point. Next, moving on to what this means for investors. Well, as I mentioned, house prices are likely to come down. How much is to be confirmed, but with property prices set to go down and rents set to go up, 2023 could make for a prime opportunity to buy. As with any investment, there is of course the risk that house prices just continue to go down. But if your plan is to buy and hold for the long term, then this risk is largely mitigated. All you have to do is look back to the 2008 financial crisis when property prices fell over 18%. Even if you had bought at the peak of the financial crisis, as long as you held your nerve and didn't sell, you would now be sitting on a property worth significantly more than what you paid for it, which of course is easier said than done. Now, this obviously doesn't take into account the vast array of things that mean this isn't the case, but I'm of course speaking in general terms, and in general, property prices over the long term trend up. That's not to say that just because you buy a house in 2023 when prices are coming down that you'll make money. You still of course have to do your due diligence. Now, as we know, interest rates are a big factor, and the sudden rise in rates has resulted in a lot of buy-to-let deals not really making sense. But again, it's my opinion that rates over the next 5 years will trend down as we get inflation under control and we return to a more normal and stable market. Next, we need to discuss what the government plans to do about the housing crisis. Well, as I previously mentioned, they have their target of 300,000 homes per year, which, if they actually achieved, would massively help the shortage. But they're missing their target year after year. So with this in mind, what else are they trying to do? Well, on the surface, it doesn't appear as though they plan to do much. If we take a look at Prime Minister Rishi Sunak's 5 promises, these are the 5 promises he made when he became Prime Minister and are what he wants his time to be judged on. 1. He wants to halve inflation. 2. He wants to grow the economy and create better paid jobs. 3. He wants to reduce the national debt. 4. He wants to reduce NHS waiting times. And 5. He wants to stop small boats and reduce illegal immigration. Now, I think we can all agree that all of these are extremely important and need to be addressed. But none of these tackle the housing crisis, or at least not directly. Reducing inflation and creating better paid jobs will help those struggling to pay rent and those who want to get on the housing ladder, but not really. Achieving these things will contribute towards solving the problem, but they won't solve the problem. And at the end of last year, Sunak announced that the government would be dropping the plans for firmer house building targets in order to give councils more room for manoeuvre in planning for new homes. Now obviously with anything like this, you have people on both sides of the fence. You have critics who argue this is a political move, while you have supporters saying that this puts communities at the heart of planning. But what does it really mean for the country's worsening housing crisis and the future of levelling up? Well, let's be honest. There is no doubt that this move will lead to fewer new homes being planned and built in many areas of the UK. It's that simple. You reduce or remove a target, people will aim for the new target. And this also brings up the fact that the issue is not only the amount of houses being built, but also the cost of homes to build and critically to buy and rent. So at this stage, it feels to many as though the UK is taking a step backwards and ignoring the real issue. Finally, what does this mean for the UK property market as a whole? Well, we know the health of the housing market depends on a few things. 1, the overall health of the economy. 2, interest rates. And 3, supply and demand. With all 3 of these kind of up in the air, it's almost impossible to predict where the property market is heading. But one thing is for certain, and that is going to be a very uncertain time for the property market. Interest rates are continuing to rise, the UK is all but confirmed to be in a recession, and the cost of living crisis is far from over. In my opinion, the best thing to do right now is reduce any debt that you have as much as possible and try to increase your income either through your current job, a new job, or a side hustle. Well guys, that is all from me. I really hope you found this video useful. If you did, remember to give the video a like, share and subscribe to the channel if you have not done so already. And don't forget that you can subscribe to my newsletter Business Bites. The link for that is in the description, and you can join our army of growing investors. Until next time,